Welcome to Breaking News to Trading Moves. Uh, So imagine this, right? A massive $5 billion tremor hitting the UK's tech scene. Google is behind it, investing heavily in AI infrastructure there. And this news, coming alongside a big state visit, really puts a spotlight on UK tech, data centers, the grid itself. Today, we're going to dig into that. Our mission really is to figure out the ripple effect, which companies stand to gain and, well, which might face some headwinds from this huge move.
Exactly. And it's more than just Google getting bigger in the UK. This $5 billion, it's a massive signal. It points to a really fundamental boost, maybe even a shift in the UK's tech and infrastructure landscape. We're talking about something that could reshape how things work for years.
Right. And an investment this big, it's not abstract. It creates very real winners and losers. So let's start with the positive side. Who's set to benefit here?
Okay, well, if you look at the ecosystem, companies like ARM, that's ticker ARM, they're sort of the obvious first thought. They're based in Cambridge, a leader in chip IP, right? Google building out UK AI means more demand for ARM's server designs or edge computing designs. AI needs those efficient, specialized chips.
Ships make sense. Who else?
And you've got RELX, ticker RELX, a UK data and analytics giant. Think about it. AI needs data, lots of it. RELX is huge in legal and scientific data. As AI gets adopted more, especially in areas like legal tech where you need accuracy, the demand for their high-quality structured data just shoots up.
Okay, so the chip designers and the data providers, that tracks. But you also mentioned the grid earlier. I wouldn't have immediately jumped to National Grid, ticker NGG. How do they fit in?
Yeah, it's about the fundamentals. These huge AI data centers, they use enormous amounts of power. So National Grid has to handle that. They need to spend more on transmission, build new lines, upgrade substations. It directly translates to more investment for them, boosting their regulated business.
Right, the sheer power demand. Okay.
And following that thread, think about Shell, ticker Shell, London-based energy major. Google will likely sign long-term deals, power purchase agreements, probably focusing on renewables to power these new sites. That's a big, stable customer for Shell's renewable projects.
Interesting energy angle.
And don't forget the financial side. A bank like Barclays, ticker BCS. Stronger UK AI and digital activity means more corporate lending, maybe more M&A deals, advising companies in this growing sector. It fuels their business too.
Okay, so a pretty wide range of beneficiaries there. ARM, RELX, National Grid, Shell, Barclays. But like we said, there's always another side to it. Who might find Google's big move, well, challenging?
Well, yeah, when a giant like Google decides to build its own stuff, it definitely shakes things up. Take Hewlett-Packard Enterprise, HPE and Dell Technologies, DOL. They're big in the UK server and storage market. But Google often does what's called hyperscale self-built. They design and assemble a lot of their own gear for these massive data centers.
Meaning less business for the traditional hardware sellers like HPE and Dell.
Essentially, yes. It reduces the demand for that standard OEM equipment they sell. It's not zero demand, but it's certainly less than if Google just bought off the shelf.
Okay. And what about companies that actually provide the data center space?
Good point. That brings in companies like Equinix, ticker EQIX. They run these big interconnection hubs, co-location facilities where companies rent space for their servers. But if Google's building its own massive, dedicated UK data centers, well, they just won't need as much space from third-party providers like Equinix. It limits that co-location demand, you see.
Right. Building their own reduces the need to rent. Makes sense. Any others?
One more to consider is maybe Centrica, the UK utility retailer. Their ADR ticker is CPYYY. All this new AI demand pushes up electricity consumption, which can increase wholesale power prices. For a retailer like Centrica, their cost of buying power goes up. But it's not always easy to pass that entire increase onto retail customers without losing them, so it can squeeze their profit margins.
Higher costs potentially hitting the retailers. That's a less obvious ripple. So boiling it down, this huge Google investment really highlights how these big tech moves create very different outcomes. Depending on where a company sits, supplying, enabling, or competing, they could win big or face some real pressure.
Exactly. And I think the bigger takeaway here, maybe the question for you listening, is how these massive strategic plays by tech giants are redrawing the map. They connect sectors you might not immediately link, like semiconductors and utilities.
Yeah.
How does that change how you think about market connections, maybe even outside of tech?
A great point to ponder. So let's quickly recap. Google's $5 billion UK AI push looks like a positive catalyst for RELX, National Grid, NG. Shell, Eshel, and Barclays, BCS. On the flip side, it could present challenges for HPE, Dell, DL, Equinix, EQIX, and Centrica, CPYYY, ADR. It really makes you think, what other hidden consequences or opportunities might emerge from transformations like this? Okay, before we wrap up, just the usual important reminder. Everything we've discussed today is purely based on the opinions found in the source material we reviewed. It is absolutely not financial advice or recommendation to buy or sell any securities. Always do your own thorough research. Thanks for tuning in to Breaking News to Trading Moves.